Good day everyone, this is your European Open briefing for Wednesday, 3rd August 2016. My name is Michael Frentiades, I'm the Chief Economist here at XM.com. These are the key points you should be aware of today. The dollar stages a modest rebound after heavy losses the previous day and previous week. The government bond yields rise a bit as monetary policy stimulus hopes might be excessive at this point. Dollar yen is currently trading with a 100 handle. There was some risk of trades, a modest sell-off in US equities. Oil is under $40. And in today's calendar, mainly services PMIs are awaited. So, on to the dollar index. I chose to put the bounce in a context. This is the bounce that we are talking about, but this is the drop that we have seen from last week and from yesterday. So they were quite severe drops for the dollar. It looks like the 95 level has held for the dollar index, so we're seeing about a 0.25% bounce in it. Now, the impression that the Federal Reserve is on hold has been reinforced somewhat by recent Fed speakers. Now, so the main story right now in forex markets is that it's very painful for dollar bulls. We've had a very big move in a short period of time for the world's major currency. But this is still looking more like the shaking off of speculators and not something that is really going to prove a long-term trend. Of course, if the dollar index drops below 93.5, then it becomes more serious. But these levels are we have seen them recently, and they are not such a catastrophe for the US dollar. The US economy overall is not doing particularly well according to the recent data, but it's also not that bad. One has to question, of course, whether the dollar is also reflecting some uncertainty regarding US elections later in November, which is something that we should look into. Now, the yen is strengthening. It's eyeing dollar yen is falling. It's eyeing 100. The post-Brexit low for dollar yen is around 99. Japanese investors are traditionally exporters of capital. They are especially big buyers of foreign bonds. But it's interesting to notice that a stronger yen might be forcing repatriation or hedging as losses keep mounting when the yen rises. So a Japanese insurer or Japanese funds who hold foreign assets, when the yen is rising, it is looking very bad on their books, and maybe they are forced to either hedge, which means buying yen, or to sell their foreign assets and buy their local currency. So this in terms could be a momentum trade by real investors. So this suggests that as the yen gets stronger, it might be forcing Japanese investors to buy even more yen to hedge their losses from their foreign holdings. So this is something interesting to keep in mind, and something to us that there could be some real money flows to explain what is happening in the Japanese yen right now. With the 10-year government bonds, they are traditionally safe havens. Here we are seeing the German government bond yield with the purple line, the US government bond yield with the orange line, and they have risen quite a lot, not a lot, but they have risen about 8 to 10 basis points since Friday. What is happening here? It's according to analysts, markets are rethinking about excessive expectations of future stimulus. Because we had the Bank of Japan not really moving much, we had the ECB taking a wait and see approach recently, so monetary policy might be reaching its limits and pushing government bond yields even lower in the anticipation of extra stimulus doesn't make as much sense. So it's interesting to notice during the past few days that safe havens like government bonds, like the US dollar, are not doing so well. But gold and the yen are doing much better. So for today's calendar, we are expecting services PMIs, starting with the Eurozone PMI, the final services PMIs, and the final composite PMIs, which include both manufacturing and services. Then we have, of course, the UK services. A lot of focus on the UK, of course, post Brexit. It's expected to be confirmed at 47.4. There are some hopes that it might be a little better than that, and it might help sterling a little bit, as the previous PMIs were also not as bad as feared. So this might help sterling a little bit. And we have retail Eurozone retail sales. And then from the US session, we have the ADP national employment numbers as a prequel to the non-farm payrolls on Friday. And we have the ISM non-manufacturing PMI. It's expected to cool a little from June's 56.5. It's expected to come in at 56. ADP national employment numbers, they're expected at 170,000. Non-farm payrolls are expected at 175 on Friday. Now, of course, the Bank of England meeting tomorrow is looming large. You can see we are expecting a quarter-point hike. This is what the market is going to be focusing on tomorrow. And sterling will be very key to watch. So, that's all from me today. Thank you very much for watching and have a great day.